Today is Monday, July 13th, and what a day it was in the stock market. Before I start, if you are new to watching this channel, I urge you please go back to watching my older videos after you finished with this one, because I exited all my long positions in June and started making videos to try to warn as many traders as I can of this upcoming correction. I was a spectator, with the exception of buying the VIX and shorting the RIPs on cruises, airlines, and casinos. And now, today, I have switched my position and entered into a full short positioning in the market. Please watch my previous videos to check my track record and my calls. I've been urging my followers to look at the signs and the signals that the VIX have been showing us since June that the correction will happen. Signal after signal after signal, warning after warning after warning, and they were all ignored by market participants. Until today, you saw the manifestation of all the warnings the VIX been shooting since June. Alright, so let's look at the day we had. You are looking at a heat map, and as you can see, red across the technology sector, big reversal, Amazon, Apple, Microsoft, Tesla, all the flyers, Baba, PayPal, all of them reversed. Nvidia, none of them were spared. The reversal was real and strong. The only sectors that caught a bid are from short coverings ahead of earnings. Banks, casinos, TSM, the Taiwan Semiconductor Company, and some of the healthcare names that are reporting this week. Aside from that, it was a major reversal. All indices, NASDAQ, S&P 500, the Russell closed in the red. The only index that closed in the green is the Dow, barely, because of United Health. There's a lot of short covering in United Health because United Health will report on Wednesday. Tomorrow, there's a big day in the banks. The banks will report their earnings. So will Delta. If Wells Fargo bombs, the market will not be able to hold. The technology sector will not be able to hold. So will the weaker names in the banks and the rest of them. We are heading to a very critical and decisive period of the stock market. If you are not familiar how I start my videos, I usually start with reading the headlines that preceded the market, and then I look into the technical analysis for the action during the market, and lastly, we talk about what to look for the next trading day and the remainder of the week. And this video will not be any different. We'll do the same thing. We'll look into the headlines, then the technical analysis, and then what to look for tomorrow and the remainder of the week. The first headline is the U.S. budget deficit in June surpassed $864 billion. That is 1 month, bigger than the entire year of 2019. We keep hearing about this V-shaped recovery and everything is going to go back to normal. But the entire federal government, municipalities all over, states are struggling financially. Keep saying that the Fed is going to solve it all. The magic printing machine is never going to run out of ink. The Fed cannot solve all these problems. At some point, these problems have to be solved within the economy. Bottoms up. Consumers have to reignite the economy. You shouldn't drop money on the biggest corporations in the world and the richest people in the world, expecting that it will trickle down and will solve the economic problem. You have to start a bottom-up approach. And as long as we continue to mess around with this COVID-19 situation, not take it seriously, we're going to see more and more pain to come. So let's segue to the COVID-19 situation. California Governor Newsom today announced closing all bars in and out and takeouts and other businesses in the state. So California is now reversing its course back to reclosure mood because the cases are skyrocketing every day and there's no end in sight. Florida yesterday reported a record in daily cases, shattered the record. How about Arizona? Arizona is recording a record in ICU admissions and hospitalization. So is the state of Nevada. But hey, keep buying the casino stock. People who are buying Wynn Resorts today. I don't know what you're doing, but be careful because that state, Nevada, Las Vegas, might have to shut down again. The last headline is kind of a look back, kind of deja vu thing. Look at this headline from February 5th. It says that the Dow is up 400 plus point, shaking off the coronavirus fears. Today we had a similar headline in the future saying that futures up, rise, future rise, shaking off coronavirus fears. Keep shaking it off like Taylor Swift until reality hits. What happened after February 5th, after the shaking off? Here it is. February 24th, the market collapses as coronavirus spreads outside of China. It's this period of the last hurrah of numbness where the market keeps going up and up and up every day, ignoring everything. The purpose of this period, the last hurrah, is to suck as many suckers and amateur traders into the trade and then collapsing the market and destroying it on top of their heads. And this is happening all over again. Let's segue to the technical analysis of today's video. We're going to look at Tesla. Tesla is the most important stock to look at. Apple is the other one. Before last week, I told my viewers that as Apple and as Tesla go, so will the market. Today, you saw what happened to Tesla, what happened to Apple, they reversed, and so did the market. Then we're going to look at the VIX. We've been talking about the VIX, and I've been saying the VIX is warning over and over and over again, sending the biggest warning signals in years. Yet traders keep ignoring the warning signals. They don't look at these indicators that are very accurate, that predict the moves before they happen. How did I know that I should sell my stocks in June and wait in the sidelines? How did I know that I should short today? The VIX is telling you the story. You just have to listen. Lastly, we're going to look at the NASDAQ, specifically the short index of the NASDAQ, the SQQQ, which I bought today heavily, shorting the NASDAQ aggressively. The most aggressive vehicle of shorting the NASDAQ is the SQQQ. I will show you the chart today, and you'll see why the NASDAQ will continue to correct, and there's massive corrections coming across the technology sector. Here is a daily chart of Tesla. Massive reversal. We've been talking about this. I've been telling my followers, be careful because the crash will come so fast, so severe. This stock will land back to earth in a violent way. And this is today was just the beginning of that landing. Here is a headline. The bears staged a massive attack. $20 billion shorting Tesla. This time, they're not going to be wrong. This time, they will eat all these Robinhood morons who are buying Tesla at these levels. They will be eaten alive and driven out of the market. The bears staging a massive attack against Tesla. Today, I shorted Tesla's stock and I released this tweet in the morning, 6:58, almost 7 o'clock Pacific time. That translates to 10 a.m. Eastern. I said shorting Tesla here is very logical. Let's look at the daily chart and see what happened later. Here's a 15 minutes chart of Tesla. My tweet came out right about here at 7 o'clock. And you see what happened to the stock after. Shorting Tesla was indeed very logical. Here's another tweet about the same time. I said that traders, and I put that in quotes because they're not really traders, they're gamblers, who are buying Tesla stock right now. And I showed the gif of the person jumping off the window. You guys are committing suicide. It's over, okay? It's over. The bears are in control now. This is the beginning of the correction in Tesla. The stock is going to drop heavily in the days to come. How did I know that it is time to short Tesla? Why was I bearish on Tesla, even though it was going up insane percentages every day? Two indicators. The 20 weeks moving average, the most accurate technical indicator in the history of the stock market, is the 20 weeks moving average. You cannot diverge from the 20 weeks moving average up or down for a prolonged period of time before correcting and coming down to touch the 20 weeks moving average. This happens all the time for every divergence. You see it here, you see it here, you see it here. Everywhere where the stock diverges from 20 weeks moving average, It has to come down and corrects to the center of gravity, which is the 20 weeks moving average. What does that mean for Tesla? Look at the magnitude of the correction from the top what we made today. We could go all the way and lose over 50% of Tesla's gains. This stock could drop and lose half of its value. Be very careful and very smart. The second very accurate technical indicator is the RSI. Every time when you make a higher high in the chart, you see this? This is a high. This is a higher high we made. Yet you make a lower high in the RSI. That is a recipe for correction. It happens all the time. You can look at chart after chart after chart. It's the same thing. Because the RSI measures the peaks and the valleys of the movement. It measures the strength of the movement. This move was very strong. It was massive short covering. It was intense buying day after day after day. Here it was different. There was a lot of profit taking. There were a lot of short-term trading. There was a lot of shorting. There was a lot of air pockets in this move. And you see it in the RSI. That means there's a correction. This stock is coming down. And it's coming down big. You always have to follow the technicals. You always have to follow the indicators, the leading indicators. They tell the story before it unfolds. And therefore, you can position yourself tactically to profit from different moves in the market before they happen. I also would like to remind you of a tweet I released in July 6, comparing the movement in Tesla stock with a rocket, side by side. A lot of people didn't get that one. They thought that I'm actually cheering on Tesla and pounding my chest. You didn't realize that the picture on the right is a picture of the Challenger rocket that exploded in 1986. I was hinting that this ride will end in a massive explosion. You're seeing that explosion happens starting today. Switching to the second most important stock of the day, Apple. You see the reversal today in Apple. I released this tweet around 7:09 a.m. Pacific time, saying that if you're buying Apple right now, you're committing financial suicide. And I attach a piece of news that indicates that smartphone shipments in China fell 16% in June. What is the thesis behind Apple's run? They're going to sell more iPhones now in a recession where nobody has any money to pay rent, let alone $1,500 phones. The run on Apple is just money inflow, people parking their money in Apple. They're stampeding to park their money there, and now it's overdone and it's coming to an end. Here is where I wrote my tweet, and you see what happened after. The stock reversed all of its gains, closed in the red. Apple is very important. If Apple doesn't recover tomorrow and continues to collapse, the entire market will follow Apple's lead, because you're going to see a massive surge of profit taking. And the same warning signals, the technical ones that I showed you in Tesla, are also showing in Apple. Here's a weekly chart. You can see the divergence from the 20 weeks moving average is very, very severe. And you can see that the stock made a higher high in the chart, yet made a lower high on the RSI. A recipe for correction. The target here from the top all the way to the 20 weeks moving average, about 20%. So big, massive corrections about to hit the technology sector. All right, let's talk about the VIX. This is a weekly chart, and I'm showing you this to show you that the VIX has been trading above its normal range. That should have been from the very beginning a warning signal to every investor and trader who's buying the indices blindly. Why isn't the VIX going down to its normal range? That question should have been on the top of the minds of every trader or investor. But they were too indulged in the euphoria that they forgot the basics of investing, the basics of looking at indicators. Go to my first videos. I explained to you that pops in the VIX to this magnitude always followed by secondary pops, and this pop is not big enough to complement this one. So we're going to see another surge in the VIX. I've been explaining this for a long time. The MACD is making a higher low right here, ready to cross the blue line and create another surge. The warning signs are right in front of you. Are you listening? Are you watching? Are you going to do something about it or not? That's the question at the end of the day. Here is the daily chart. The VIX ended the day up 18%. Massive day for the VIX. You can see the surge right here. In all probabilities, the VIX will start building on these gains. See, I put this blue line right here because that was my line of the sand. If the VIX closes weekly below this blue line, then I'm going to reverse back to being bullish and short the VIX. But as long as the VIX was trading all the way above this line, I was buying the VIX, amassing a massive positioning in the VIX, and now I'm seeing the reward. Here is another vehicle to short the Nasdaq. I bought this heavily today. I bought it early on. The S-Q. This is the most aggressive vehicle you can short the Nasdaq with. So you only use it when you're really bearish on the Nasdaq. And I bought a lot of S-Q, short triple Qs today. Let's look at it from a 15 minutes perspective. Here's a 15 minutes chart. A gap down. And here's a signal to buy immediately. And a rocket ship to the upside. If you've been following the VIX, if you've been following the reversals in Apple and Tesla, this was a no-brainer to buy the short triple Q. Big day, up 6.15%. I will continue to appreciate in the days to come. All right, so let's conclude and see what we're going to look for tomorrow and the remainder of the week. Before the beginning of last week, I told you there are two scenarios for the market. Both of them are bearish. This is, by the way, a chart of the S&P 500 E-mini futures, the continuous contract. I said either we're going to reverse from inside the consolidation box directly, or we're going to reach a double top here in this resistance, and we just did that today almost. And we're going to reverse and curl back down. What is the correction target for the short term, at least in the E-mini futures? Here it is from the top. You go down and touch the weekly 20 weeks average. That is a correction of over 10%. These corrections are not going to materialize immediately. You've seen the beginning of the materialization of all the warning signals and indicators we've been looking at for weeks right now. The correction will take its course. There's a little bit of pause. You're going to see earnings will interfere in that. If earnings come a little better than expected, you're going to see the market having some vindication and moving to the upside. However, at the end of the day, the correction just started, and if we have any bad news in earnings now, it's just going to accelerate the move to the downside. Wells Fargo is the most important name to report tomorrow. If Wells Fargo bombs, it's going to be really terrible for the market. Delta Airlines is reporting too. That is the first indicator of the health of the travel and the airline industry. We already know it's bad, but is it a little better than expected, at least a little reason for Delta and the airlines to rally? We'll see. If the airlines and the travel and the weaker sectors rally, that would soften the blow to the overall market. But if they bomb, along with Wells Fargo, along with the Nasdaq, oh boy, it'll be a big, sharp, fast correction. For now, I just started my short positions. I will use any rip in the market to short again. I'm looking at the short triple Q. I have a short in Apple, a short in Tesla that I started today. Specifically speaking in Tesla, the correction in Tesla just started and it will be really, really sharp and fast. Please don't do anything stupid like trying to buy the dip in Tesla at these levels. When the short float went from over 30% in Tesla to now 9%, over 20% of the short was covered. That is the reason for the rally. What is the factor that will push Tesla stock higher now? There is no short covering anymore, and the buyers can't buy anymore because it's too expensive. It's just too expensive for the younger guys on Robinhood to buy the stock. So the scales now have tipped in favor of the bears and the shorts. They will win. They will drop the stock significantly to the lower side until it reaches a price where the longs say, all right, this is a bargain at this point. Let's hop in and buy. And shorts will start covering. And you'll see Tesla stock having a bottom and starting to recover again. But that is a conversation for days to come. Right now, we just started the correction, so we'll take it as it comes. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.